Another rough day in the markets. Are we going to see a correction? We need to talk about it. I am Dr. Stock, Doctor of Education, and I got a lot in this video for you. And just so you know, if you are a house and you're going to a party, you better wear a dress. I'll tell you what, I'm so excited to get into this information for you so that you're aware of what's going on in the markets that I almost botched the joke there, but we're going to call it salvaged. We're going to move on into the charts for SPY, QQQ. We better also bring up DIA and IWM, talk about S&P, Nasdaq, Dow, and Russell 2000 stocks to see what each of them have done in the markets today and what they have done recently, and talk about that whole market correction idea that's out there. I also can't neglect Nvidia earnings. We got the some of the paperwork on that, some of the documentation for their earnings for the second quarter, and there's some things to be concerned about. I also want to show you just a quick update on what Nvidia and Tesla are up to. All right, enough of that. Let's get right into the charts. Here we are looking at SPY, and when you look at the chart for SPY, which tracks the S&P 500, check this out. It says breaking below the 20-day because I put this up as the market was going. I said unconfirmed because at the time when I put that up, I wanted the people over my stock group to know that that I was letting them know that just because we were below it and we were breaking below at the time, it didn't mean that we necessarily lost it as support. So what we can do is we can update this. We'll put it to green, and we're going to call it 20-day support. And we're going to get rid of breaking below. Because we didn't break below it, we actually kept it as support when you look on it. And that's important for us because if you look back historically, we almost came down to it, rallied. Back here, we came down to the 20-day support, we rallied. And I think one more time, back here when we crossed over 20-day support, we also rallied. So as far as the SPY is concerned, we don't know that we're necessarily in that correction territory. If we do happen to correct, it could be something that is tech-led. And I'll show that in the Qs next, and certainly when we talk about Netflix out there and also the update that I have for Nvidia, we'll get that as well. So far from peak to trough, from what we have, we're not even 3% down in SPY right now, not in correction territory, but certainly giving back just a little bit of what those gains were that we had. It's not as tech heavy, it is more bank heavy when you look at SPY than it is tech heavy like the Nasdaq 100, which is what the Qs track. And financials have done pretty darn well, so maybe they've given a little bit back today, and that could be part of what we're seeing here. With that said, let's go over to the Qs. Oh, by the way, momentum-wise, we are still up above 50. So yeah, falling momentum, still above 50. I think we're still somewhat safe for the SPY as per the technicals here. The Qs are the ones that can be a little bit more concerning. We actually, in the post-market, trade a little bit up above close. We did not come down to the 50-day EMA and SMA that I have on here, and I have watch for support. That is absolutely critical that you watch and see if we continue to sell, that we hold on to those to support, because that can be a major area for a big old bounce to come our way, possibly even to turn back around. So we wouldn't be watching for that. A big tech is what it's going to take. I don't know that Netflix helped us. We're going to have to wait for the earnings call itself to come out. And like I said, I do have some of the earnings information to share with you in this video. I'll give you my take on it. We'll see what the earnings call does and what's happening in the after hours here. Dow Jones, what's going on with DIA, the ETF that tracks the Dow? Well, peak to trough is just this one single candle today. So when we look at that one and we put the measurement stick on here, that is, let me see, from top all the way to the bottom of the candle, not to the close, down 1.93. It's not even quite 2%. If we go to the close, it's 1.8% down from the top on that one. And so we'll see if this 5-period exponential moving average gets broken. If it does, that can signal a further sell. Right now, we're still very much in the bullish territory for the RSI. And what we're watching for the RSI is to stay up above the 50 line, which is all the way down here. So we keep that momentum. This yellow line is a moving average. It's a 14-period moving average. It's on here. Dropping down below that is a bit of a bearish signal. So that's just something that we can watch for as well. If that momentum falls that way, then we're looking to overtake it, because when you're above it, that's a bullish thing. When you are below it and you keep getting rejected off of it, you could continue in a bearish direction. By the way, the Qs, we had not even 3% down for SPY, not even 2% down for what we had for the Dow. When we go peak to trough on the Qs, where did we go? Well, we went down 5.48%. That is technically a correction, being a correction starting at 5%, going all the way down to 10%. And if we measure it again, this time from peak to close, where did we close at? We actually closed at negative 4.86% down, not quite 5%, so we're not necessarily technically in correction territory on that one. So we'll see what comes our way. Netflix, I think, could be one of those early tells that we get. It is one of the massive tech companies that we have reporting, and also one of the earliest that's out there. So it could be a bit of a bellwether for us. We just want to pay attention to that. IWM, where are we at for that? Well, yesterday I said we could get a further sell. That's what we got. I also said to watch for support around 218, and guess where we closed? Right darn around 218, 217.95. So if you've been watching my videos, you know that was expected. It's nice that we caught this 5 EMA support here. I don't know that we bounced yet. We have an area of support all the way down to about 214. And this is very critical historical support through here. So we do continue to sell. Watch for that support level to come in. We did fall down below trendline resistance, but this historic support that we have here is much stronger. So I'm going to be watchful for that. And if you want to see more of what's on here, I can move the chart around for you a little bit so you can see that we did make it up into this historic resistance, got rejected, got these high wicks up here, further sells going back down, and this trend line support, because we closed below it, is now trend line resistance, which means that I need to update that, and we're going to go from green because it's not a bullish thing, because it's not support, and instead this resistance is now something that we have to break up over, something that is going to cause it to make it more difficult to get that upward pressure enough to push us back up over that, although I don't know how strong that support or that resistance is, whereas the historic resistance and support I know are very strong, and we can see that happening. We even had a full candle. If we go back in here, and I'll stretch the chart out for you, look at that. This whole candle, that whole thing was fighting through, swimming through that support that we had. As soon as we ripped out of that support, boom, blast off, big old pickle coming out of that, almost 3.5% on Tuesday, and now we're just giving back a little bit from where we've been at. So measurement wise, what did I say for this one? From peak down to the trough of this thing, 4.31%, and from peak down to close, 3.84. So not quite correcting for what we have for the Russell 2000 stocks. I don't know that our run is over for them unless the rest of the market starts to correct, in which case the run is probably over for small caps as well. I will say that when the dust settles, whenever we reach bottom of whatever it is that we're going to do between now and the election, I do think, now mind that I also don't know that now's a big drop, just so that's out there. But I do think that there is a drop still yet to come between now and the election time. And whenever we go to pick up the pieces from all the rate cuts and everything, I think the IWM, wherever it's at, especially if it's at a low price, is going to start outperforming what we see in the other indices in the lower interest rate environment. But the dust needs to settle first, and we need to find out where those supports are coming in. Right now, in the short term, in the near term, we found a nice firm support on this historical support at 218. We'll have to see what the rest of the market does. All right. Update. Oh, I forgot about Bitcoin. I'm also going to update you guys on that as well. Nvidia, this range that we're in, check this out. Going back to yesterday in the early morning hours, we kind of got stuck between 117 and 122 all throughout the trading day today as well. And in the after hours, this is the range that we need to break out of. We did happen to fill up into this gap a little bit, up to almost 124, which I said was 122 up to 125. We pretty much filled that gap, got rejected off this resistance line, this trend line resistance that you see. We need to break up above that, because above that is more bullish. If we break down below this significant buying pressure that we have down here, that you can see that we got really strong rejections both times. We bottomed out at 116 and then rallied all the way up past that. Let's not count that. We'll just count up to, we'll just go this part in the early morning hours of today up to 122. So a $5 to $6 change there. And then we dropped back down, caught that support down here once again around 116, 117, came back up to about 122. So this range right now is what's being obeyed. And until we find out where we pop out of that, we pop out the top of this thing, we can get a further bullish movement. If we fall down through the bottom of this thing, we get more of a bearish movement from that. Tesla, looking very similar in terms of being a range. Now, mind you, I talked about this consolidation pattern. We broke out above this, and I was a little bit trigger happy on this one, and I jumped in expecting that we might pop to the upside on this one, break out a little bit, catch a couple of bucks on a day trade on that. That one I got stopped out on, and as we started to come back in, I got a short position on this and then cashed in on that. So the net negative on that was very, very small, very minimal percent. I didn't calculate it prior to this video, but this range that we're in, it looks like we need to get outside of 247 to 257 to find out where we go next for that price action. And this could be where we chop sideways until we get to the Tesla earnings, which are on Tuesday in the after hours. Bitcoin, what's Bitcoin doing? Well, check it out. For Bitcoin, in this one, market doesn't stop when the market closes. So we are currently, as I record this video, down below the 50-day simple moving average. Not necessarily support broken on that. That's just where the current price action has it right now. We do have these high top wicks, so it is possible that, there we go, that looks better. It is possible that we continue to experience that selling pressure. We got to watch the 50 EMA support that it has. I'll adjust that. There we go. Because if we lose the 50 SMA, lose the 50 EMA, then we know that there's a further sell coming to Bitcoin as well. If the market corrects, it could take some of the riskier markets, some of the riskier assets with it, such as Bitcoin, and down along too. So watch those top wicks, watch the 50 periods. That's going to be absolutely critical to determining the direction that we follow. So we did break above the 200-day, we broke above the 50, but now we're back down below it. So if that's the peekaboo that we get, that's it. Then sell back down through, then we can have a further correction to Bitcoin's price. So 60,000 would then be the line to watch. We still have support right around 62,000. Not only is it historic support, but it's also about where we find this EMA. All right, so for Netflix, let me change the screen for you, and I'll put up what I have for Netflix for their earnings. I'll give some commentary on this, and we'll also take a look at the charts to see what they're doing in the after hours. So when I look at this, now mind you, they're going to try and give their best take on this. So let me also zoom in so I can give the best view for you guys. And I think looking at this table is really helpful for the explanation for what could possibly happen from this. So revenue, when you look sequentially, it's actually gone up sequentially. And, you know, modestly, I guess I would say, maybe about 2% quarter over quarter, which is not so bad because what we're looking at is millions. So this is billions of dollars. So $9.4-ish billion, $9.6 billion, not so bad. And then when we look here, it says 16.8% year over year growth, but it also looks like they may have stepped in a hole back in quarter 2 of 2023, especially their earnings say that. But now, mind you, quarter 4 is where their diluted EPS really took a hit. So that's going to make their year over year margin growth in quarter 4 of 2024. It's going to make it an easier time for that. When we look sequentially, we did not make a growth as far as the diluted EPS goes. The net income being down from the previous quarter, and then operating margin also has shrank during that time. One thing that they do point to is that they are accelerating their ad revenue growth. So that's something that if they keep on building out that ad tier, and that's something that is that next growth curve that just hasn't fully hit yet, that could be something that's still a positive catalyst for Netflix earnings. We're going to have to listen to their earnings call and see what they say about it. When we look at what we have for global streaming paid memberships, we had 238, and what are these in? These are in millions. So 238 million, and then gained about close to 9 million more after that, and then 13 million back to 9 million. And then on top of that, it looks like we got about 8 million. So sequentially, once again, it looks like right there, the numbers are right at the bottom. I could have looked at those. So when you look at these, we peaked right here so far in Q4 of 2023, and then dropped off a little bit when we got to Q1 of 2024. And then when you look here at Q2 of 2024, even lower yet than what we had. And so we know from the last quarter that Netflix said that they were going to stop putting out subscriber counts because it's not necessarily the best indicator of revenue. So I think they're really counting on that ad tier to really start to help fill things out for them and to help keep that growth going. So net cash provided by operating activities, not a lot of cash generated this time. We actually had a pretty good time of that last time. This time, nearly cut in half from what was before. So I wouldn't say that this is the most flowery set of financials that I've looked at. Now, mind you, Netflix, I don't think it's going anywhere. I think it's still a very solid company. I think near-term price action-wise, there is a potential that we do have a lower day tomorrow than what we're at right now. So you guys, if you want to check this out, you just go to the investor relations page for Netflix, and then you just pull up the shareholder letter, and you guys can get access to this. It's 100% free because it is a publicly traded company. They have to put this kind of stuff out. Now, in terms of the FX growth, it's actually up here that I want you to see this. It says foreign exchange rates on a neutral basis translates into 19% revenue growth due primarily to price changes in Argentina and the devaluation of local currency relative to the US dollar. Why that's important is if Trump should win the election, it is currently expected that we get a stronger US dollar, which means that we have worse foreign exchange rates or exchange rates on foreign currency potentially if we get that strengthened dollar against the foreign currencies. So that could mean that the foreign exchange rates aren't as great, which means that Netflix would have to increase their prices to receive the same margin in US dollars. So that would mean further pressure from them. So then it would fall back on pricing power, which I think that Netflix might still have some pricing power to go. So we're going to have to look and see what they have to say. So with that said, let's bring that down. We'll bring up the Netflix chart. And then, like I said, if you guys want to talk with me in my stock group, you can find me through the Patreon. You can click that link down in the description. Hop over into the Discord and see my buys and sells. Talk with me and the community members. We'd absolutely love to have you over there. Technicals, there we go. So we're down below the 50 EMA and SMA as of today's close in the post market. That's this blue line that you see on here. $629 down from $643 at the close. And most likely we haven't gotten that earnings call yet. So let's go over into the hourly, and you can see this thing goes wild. And this is why a lot of people will exit positions prior to earnings, because they don't want to sweat the earnings risk, because it really can be a coin flip at times. So in the after hours here, this thing bottomed out at $600 per share and went all the way up to $658 per share. And it's just going to continue to be wild over time. We're going to have to see by the night's end where exactly that puts us for that open tomorrow. If we're lower when things open up for us for Netflix, then that can be something that means that we get a further sell, and that can also put pressure on the Nasdaq. And I think that Nasdaq might actually, if we do get a correction, I think that could be the thing that leads the correction. So we want to keep watching for that. And I got a couple technicals on here for Netflix that you might want to pay attention to. We are in a large rising wedge pattern. And if we open up down below this one, let me get rid of some of these other ones here. So but mind you, the one I'm about to delete is part of a bullish channel. So coming down, I'll leave it on there for right now. Let's get rid of this one though. We don't need this one. There we go. So rising wedge pattern, and it's also within, well, more recently, I would say it's a rising wedge, especially if we come down and get a touch there and confirm it. If we break down below that, that's bearish, but we're looking for the bottom of this, which is that bull channel that we've been on for quite a while now. We break down out of that bull channel, then we're looking for the 200-day support. So that's if we open lower tomorrow. To the upside of this, we can hit our head close to that $700 mark. And we also have those 50-period moving averages that I talked about before for Netflix. And like I said, this can put pressure on the other big tech stocks in order to really perform, to keep things flowing for the market in general. All right, guys, let me know what you think of this video down in the comments. Let me know if you think that there's going to be a market correction. Let me know what's your favorite stock that's out there. Is it one that I've talked about? Netflix, Nvidia? Is it in crypto? Is it Bitcoin? How do you feel about Netflix? If you guys want to see my buys and sells, check out the link for the Patreon. Join us in the Discord. And if you want to learn to do technical analysis like I do and bring power to your portfolio through technical analysis trading, grab that link down in the description for the technical analysis trading course. And let you guys go. Thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you in the next video.